All right. So today we are joined by Steve Frost from National Mortgage Funding. We're going to talk about, Steve, some big topics that I think are having a big impact on the U.S. housing market. But before we jump into that, welcome back. How you doing? How's the week been?
It's been great, man. I tell you, the last few days have been a nice relief from every day looking at interest rate sheets and quoting rates to people, and then helping them pick their jaw up off the floor and all that stuff. So it's finally it's been a good week. So
Yeah,
no
that's
complaints,
great.
man. Thanks for having me back.
Absolutely. Yeah, and we're going to get into that later in the show because we're coming off of last week where rates went over 7%, and then this week I think it's a different story, and so we'll talk about that. So, first I
Yeah.
want to get into this whole debt ceiling thing. It's probably on every major media outlet, it's on every headline. What we want to know, Steve, is how does the new deal that the government made impact mortgage interest rates specifically?
So I mean, good question. That how does the new deal impact interest rates? Like it's the fact that there is a deal that impacts interest rates, right? And so we've had there's a lot of volatility in the market, like we know that. And as the debt deal got closer and closer, like everybody knew, every pundit, every politician, everybody that has skin in the game of this is like, yeah, we're going to get a deal done. But the markets just didn't believe it. And so what happens is you get Moody's and you get some of these other ratings agencies out there, and they start downgrade or threatening to downgrade uh, American bonds or treasuries, right? So what does that mean? Like they're basically giving them a bad credit score. They're like, hey, there's not if this debt deal doesn't pass, like there's a possibility that we're going to downgrade United States debt or treasuries to a worse credit score, right? So
Yeah.
America's about to get a 680. Like it's not terrible. Like we're not over here like North Korea country, but we're about to get a 680. And so when they start talking about that, the bond market immediately just starts saying like, we lose liquidity, and so they have to start increasing the yields the same way that it happens with inflation, right? Like in order for people to buy these investments and have them be considered long-term safe investments, they've got to raise the rate of return to get people to buy them if they're threatening the value of those bonds to possibly lower in the future because of downgrading our credit score. So as the days went on and we got closer and closer to this thing, because we're still going to make it by like the skin of our teeth, right? Like I
Right.
think
Yeah.
they said the government runs out of money or we can't pay our bills on June 5th, which again is a fallacy. Like there's all
Right.
kinds of other, like this happened before. Do you remember when they closed like national parks? Like they closed federal museums. They did all these different things. They closed all these federal offices, which is just kind of like a show of like, here, we're going to like stomp in our sandbox. I mean, there's ways to make all these things work, right?
Yeah,
And
and let me
so,
just jump in really quick. You said something to me. We went on a nice little family, a double family vacation, your family and my family last weekend. You said something to me when we were sitting next to the water slides about. Well, you said that this is just a manufactured story. There's no way that the government doesn't get this deal done, and you were spot on. I forget who I was watching. I was looking at one of these hearings in Congress, and there was never going to be a world where we didn't figure that out. It was just a matter of what it was going to be. And so now that we
right.
have, I digress, keep rocking and rolling. But I just think it was funny that all these YouTubers are, U.S. is going to file bank. It was never going to happen, not ever.
No, not at all. And there's even some of the things going around there, like, some of America's wealthiest citizens are worth more money than America has cash, right? And so you look at like our treasury cash reserves. So like, it's such an apples to oranges thing. Like if you really think about what headlines are, of course, Elon Musk is worth $192 billion, right? Like as he's now the wealthiest man in the world as of yesterday, thanks to Tesla stock going up after he met with
That's right.
China, bop, 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 all these things happen, right? But Elon Musk can't go to the ATM and get 192 billion dollars
That's
out of the
right.
bank. Like, and there's tons of story. Like, there's been a lot of headlines, and that's just how like really really wealthy people work, because they have money tied up in assets that hold value, and then they borrow against those assets, and then sometimes they'll sell them to pay that back and do that kind of. So again, it's just like nonsense headlines. The problem is that when you get these ratings agencies, that's when it really started to hurt us. So all those things are going on, and then while we were gone this weekend, we were was it Sunday morning? We went and grabbed coffee. I'm like, well, they reached a tentative debt deal or reached a deal in principle, and now they're gonna move forward like we knew they were going to. And the reason that it takes so long is that they were going to 100% reach a debt deal. That's the easy part, but the hard part is all the other political agenda BS that they pack inside that. Because what that
Right.
is it's a deal. And so they pack in there like clawing back COVID spending, and they wanted there was even mention of them bringing back some of these FHFA mortgage changes, like the Biden benefit to people with worse credit, and all kinds of things. Like they took back that $80 billion that was earmarked for the IRS, and they changed like some defense spending, and so they pack it in with all this other political stuff. This happens all the time. That's why they had such a problem, and that's what they were negotiating, was all the other nonsense. Like Joe Biden and Kevin McCarthy are like, yep, this is cool. Like we need to do this for our debt ceiling. We need to raise it. We need to do this. We'll set these cap. Okay, perfect. That's fine. All right. What about all the other BS for us to sign this bill? And
It's a great
that's
point.
literally all.
Yeah.
So as soon as
So
that happened, we saw rates go from interest rates, like the bond market, they go in. It becomes a liquidity issue, right? Like nobody wants to buy these things, and if the thought of actually going bankrupt happens, people are going to buy into these like these shorter term investments. So your long term mortgage backed securities and 10-year treasuries, those markets get hit worse. There's less liquidity. You have to raise your funds, raise your returns to get people to buy them. So
and that's
I'm,
what happened last week, real quick, right?
yeah. So we're looking at rates, dude. We were at like legitimately in like 7.375% to seven
Yeah.
and a half percent on 30-year loans at the end of last week. And then yesterday I locked two loans at 6.625% with no points. We got a little bit, and we'll talk about it more later. We lost a little bit of that today because of some of the jobs numbers that came out. But again, I think that as the market continues to digest some of that data, that I think it's ultimately going to be, it'll ultimately come back and go back to, again, following technical data, right? Rather than following the emotions of these markets.
I love it. Well said. You nailed it, because I was going to say the same thing. When we talk about mortgage interest rates on the show, we often say, mortgage rates follow inflation, and here's the data that we're looking at every week, every month. And, pending any weird things that happen in the market, the debt ceiling negotiation was one of those things that kind of just threw us off for a couple weeks, which spiked interest rates. Now that bill is in place, do you think that the mortgage rates moving forward, the trajectory looking ahead, kind of gets us back on track with where mortgage interest rates will start to go, which is that trend downwards over time as inflation comes down?
Exactly. So we call like a return to technicals, right? So, I mean, the bond market and the mortgage-backed security market were like wildly oversold for a very, very oversold for a couple weeks, really, all because of this. And it's just funny because the people that trade these bonds and that determine these prices and make some of these things work the way they do are some of the smartest people in the world. These are the best financial minds in the world, and they follow these headlines. So now we're going to go back to looking at a lot of data, and a lot of data has really been going in our favor as far as inflation goes. Today, the employment report wasn't great, although the unemployment, we created a lot of jobs, but the unemployment rate actually went up, which is kind of interesting. So it'll be interesting to see how they analyze that.
Interesting. Cool. All right. So let's switch gears for a minute. And before we get into the next topic, for any real estate professional, Steve, that maybe needs a better loan officer to partner with, what's the best way for people to get in touch with you?
So we'll put a link below this. With just email me or call me, and I've got a team of people here that will make sure we get you taken care of and get you the advice that you need. We're licensed in Michigan and Florida. We're adding more licenses as we go, and so that anybody that's dealt with the financial regulatory affairs, you will know that is not an easy undertaking. But we've got partners and things like that. We'll always make sure we get you good advice and head it down the right road.
Yeah, awesome. And I'm not even going to call this a shameless plug, because I believe Steve is the best loan officer in the country. He's proven it time and time again. He continues to service our team here in Michigan. So yeah, if you guys are real estate professionals, you're looking to partner with a phenomenal team to provide your clients with the best service, talk to Steve, get an idea of what it is that they do and how they can help your business. And I think you'll be glad that you do. So